Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that responsive sellers continued to be active at the 02 to 04 resistance area. And at this point, heading into the open, the market is failing the overnight balance. And we could get a move lower into the 84.75 to 86.75 initial support, and possibly even down to the 77 to 79 area, depending on how weak the market is intraday and the type of volume we're seeing in the market. So off the open, we're going to be using the 93.75 to 95.75 area as the micro bull bear zone. If we are holding below that, that's a confirmation that the sell side is now in short-term control, and that can lead to a move down into the 84.75, 86.75. On the other hand, if we start holding back above the micro bull bear, then the market could continue to balance in a range and go right back up towards the 0.5 gap fill and previous VPOC, and then the 02 quarter to 04 quarter initial resistance zone is still going to be a inflection point where larger time frame buyers are going to have to step in order to really break through that zone. That's a very key resistance zone, and that was an area highlighted even in the recap that the market can still fail there, and there can still be another down leg because the bigger picture context hasn't really changed. This is simply a market where we got a downside move, 4 days of consistent selling, and then an exhaustion move back up into the 0204 area. And now this is really a major inflection point where we're going to find out whether the buyers are really stepping back in and taking over, and whether the market can rally and start to go back up towards those previous highs, or if we're simply going to balance and go back down again and kind of establish a range before really figuring out which way it's going to go. Given the strength of the selling that we saw over the last few days, it would be pretty normal for the market to balance today below 02 quarter to 04 quarter. So as you go up towards that initial resistance zone, the risk is more on the buy side than the sell side. So in order to really put in a breakout above that area, we do want to see some strength on the momentum on the NYC tick and some strength on the advanced decline. Without that, it's going to be very difficult to break 02 quarter to 04 quarter, and it is going to be risky to buy near that area unless there's some decent momentum behind it. On the downside, a failure at micro bull bear again brings that initial support zone into play. Responsive buyers can be active at initial support. That's something that will have to be gauged in real time to just see the level of selling, the level of momentum in the market, and just what kind of broad market weakness we're seeing as ES goes down into the 84.75 to 86.75. And then below that, we have support 77 to 79. That's a pretty decent inflection point. Buyers can be active there as well. So off the open, the 93.75 to 95.75 area is really going to help us set the bias for the day. And beyond that, just understand that, bigger picture, we are at some decent resistance. And, unless you're seeing some pretty decent buying in the market, you're probably going to want to be very cautious on long setups and try to get some good trade location on the short side as long as we're, actually struggling and breaking below the micro bull bear. That's really going to be a short-term key zone to help set the bias for the day. So those are the main ideas heading into the open. Let's see if the sell side can actually maintain the short-term control that we're seeing right now, and we'll take it from there.